Good afternoon, my fellow traders. Thomas Saw here from TRT Academy. Today, 10 June, approximately 2:30 p.m. I have here in front of me a nice potential directional swing candidate for US market. This is, as you can see from the chart here, this company is a well-known company known as Lincoln, a well-established social media company. It's something like Facebook like that, but Facebook is for social, Lincoln is for professional and corporate use. Anyway, let's focus on the subject on hand. This is, you're looking at the last 6 months chart patterns. Two earnings back, somewhere in February, Lincoln from approximately $190 level, $190 level, plunged down to hit drop down to $102, $103 level. From there, it tests a low of approximately below $100 level. Since then, since February, the nice slow trending outwards, hitting a high of now 136.52. Okay, so how do I consider this as a directional swing trade? First, you draw the channel. As you can see from here, the immediate chart high is approximately around 132 level, around there. It broke the 132 level last week. Since then, 2, 4, 6. We've been trading 8 days above the 131, 132 resistance, so-called the resistance level. So yesterday it did try to break the 14140 level, failed to break through. So more importantly, the fact that he have been staying above the 131, 132 level for the last 8 trading days show this one have some strength. So when to enter this trade? This trade, as I said earlier, when we enter a swing trade, we tend to enter with a more conservative numbers. Okay, ladies and gentlemen, do me a favor. When you trade a time, please do not use the same method for all time frames. Some of you attend my non-farm payroll session, you use my ultra methods. You see, my ultra methods can 1 minute candlesticks can apply for and 1 minute and 5 minute candlesticks can apply for swing trading. The answer is no. You must use the appropriate time frame to do appropriate time frame to do the appropriate duration of the trade. For this trade, if we enter this trade, we are expecting this trade to hold this trade for 4 to 8 week cycle. I repeat, we expect to hold this trade for 4 to 8 week cycle. We will close this trade 1 week before the earnings announcement. Okay, for whatever reasons, my students will know. So, Thomas, can I enter now? The answer is no. The immediate channel called the channel resistance levels is approximately at 131, around 131, 132 level. Can make it 132 level. The price action value, to do a what you call a 4-week swing trade is approximately $9. So 132 plus $9. Where you want to enter? You need to enter around approximately, your entry line is approximately 141 level. We treat as 140 as your first warning indicator. You will enter the trade when you break 141. Okay, from there, you after you enter 141, your target profitability zones before hitting any major resistance level or resistance channel is approximately around here somewhere, 13180 level. Thomas, why don't you exactly here? You can use exactly the tip of this red candle here. My personal viewpoint, don't bother. We are conservative traders. We are not greedy traders. We don't want to maximize profit. So we 180, is approximately one price action value down. Based on current price action value, is one price action value downwards on top. So 180 is our so-called major resistance 9. We do, if we come close to this 1809, we will be start taking profits. So we enter long Wayne, no sorry, long Lincoln when the underlying broke 141 level. 140 level, standby. 149, enter. So Thomas, how many shares should I buy? Based on these trade scenarios, my advice to you: do not buy shares. Why? Because it's not worth the risk. It's not worth the risk and reward. Because my philosophy is very simple. Why should I spend $14,000 to buy one lot 100 shares when I can do it with $500-600 in option money or $1,000 in option money? The question is very simple. You want to spend $14,000 to do 100 shares, or you want to spend $500-600 to do equivalent position for underlying? Okay, Thomas, I use stop loss. Do me a favor. This company has been a most volatile company. I should make sure to me by volatile company. You can see from here, when come earnings or come other so-called corporate announcements, you can see from here, $185 range part drop down to 110. You can see here announcement shoot up by another about $20 here. Another earnings announcement shoot up by now from $250, drop down to drop down below $200. So this company is not advisable to buy shares. It's best to use directional options. Whether is it a long call, a short put, or bull put spread, wherever, or bull call spread, is all secondary. Choose the right instrument for your risk budget. I repeat again, choose the right instrument for your risk budget. This company have great potential to make a lot of money. After all, this company, a $20-30 move during the earnings season is not a big deal. So of course the last earning itself was a non-event. You can see from here it moved up less about $5-6. Okay, but you can see from here this is what I call a monster mover. Okay, so we will enter to standby to enter when you touch breakthrough 140. We enter at 141. We stand by to take profit when it's coming to 175 and 180. 180 is your definitive, what you call major resistance 9. This trade duration, I repeat again, 4 to 8 week cycle. You will get out 1 week, approximately 1 week before the earnings announcement. Why? Is to safeguard your profit. Take profit. Do not hold a swing trade through earnings announcement. I repeat, do not hold a swing trade through earnings announcement. If you want to hold through earnings announcement, they got unique trading strategies designed to trade earnings. A swing trade is based on market directionality, based on price action, based on trend lines and TAs. Earnings will often distort and often destroy chart patterns, trend lines, and whatever. So enter this trade, standby, enter at 140. Okay, triggering point is 140, standby, enter at 141. Best use options. Use options that you can afford to lose. Thank you very much, my fellow traders. I look forward to seeing your results from the market. Thank you.